Assalamu alaikum. People in the United States get really excited when they hear news about a new round of stimulus checks from the government. But in reality, the real stimulus came in the form of stock prices appreciating in 2020 to the point that they appreciated, and asset prices in general appreciating. But if you weren't invested, you missed out on this stimulus. So if you look at the NASDAQ in 2020, it was up close to 40%. The S&P in 2020 was up around 20%. The Dow was up 10%. And a lot of this rise in prices was the result of the monetary policy of the government. And so the people who were invested in the market benefited, and the people who weren't invested didn't benefit, didn't get the stimulus that the government was offering. If you look at the United States, according to one poll, around 55% of Americans own stocks. And I have to believe that outside of the United States, that percentage is even smaller. So in this video, I want to tackle some of the main reasons that I hear for people not investing. And by the way, before I start, as always, this is not investment advice. I'm not your financial advisor. Make sure you do your own due diligence before you make any investment decisions. The first reason that keeps people away from investing is the fact that they feel like the market is very high, very richly priced right now, and they're waiting for a crash. To this, I would say there is definitely a non-trivial chance that the market drops 30 to 50% of its value in a matter of weeks, or maybe even faster. And sometimes it comes from a reason that some of us were anticipating. Sometimes it comes from something completely out of the blue. All you have to do is look to 2020 and how the coronavirus affected markets at the beginning of the year. This was something that wasn't on anybody's radar. The last time a pandemic like this hit was 100 years ago. In the course of 1 month in 2020, between February and March, the S&P dropped from a little over 3,300 to around 2,200. So it lost around a third of its value. However, for those who wait for a crash to happen before they start investing, what do you think is their reaction when the crash actually happens? I'm here to tell you that in many cases, these people that are waiting for a crash, when the crash actually happens, they're actually more terrified to invest than they were before. So they actually don't invest when the crash happens, even though they were waiting for it, but they don't invest because they think the market is going to go down even further. And then the market recovers, and they're on the sideline. And now they're discouraged from investing because only a short period before the market was at a lower price. So maybe the market will revisit those lower prices and the market continues to recover. And they continue to be on the sideline and wait for the next crash to happen. Meanwhile, those who were invested, yes, they do experience volatility in their account balances. And yes, it is certainly painful often to see your balance in your investment account drop substantially. But if you had a long-term outlook and you didn't panic and sell, eventually what has happened historically is that your account recovers and it gets back to growing again. Something that I've noticed in my more than 10 years of investing is that there's always someone predicting an imminent crash. If you go to 2011, some people were predicting an imminent crash. In 2012, the same was true. In 2013, the same was true. And for every year after that, people were predicting an imminent crash for various reasons. And yet, between the years 2010 and 2020, the S&P had an average return of around 13%. If you were waiting on the sidelines during all this time, you missed out on one of the strongest bull markets and longest bull markets in the stock market's history. Don't get me wrong. Again, could we see a 20, 30, 40, 50% correction in 2021? Sure, we absolutely could. I think the most imminent threat is perhaps the threat of inflation, which could cause the Federal Reserve of the United States to raise interest rates, which could potentially cause the stock market to crater. This is a very real threat. But I do think that even if it does crater, that eventually it will recover. So if I'm investing for the long run, which I am, and I'm a net buyer of stocks, which I am, this is actually going to be somewhat of a good thing for me because I'll be able to buy stocks at a lower price. So when fear of a market correction is high for me, I dollar cost average, so I invest consistently over a period of time. I keep money on the sidelines, so have some dry powder, have some cash, so that if a correction happens, you're able to take advantage of discounted prices. I take some profits to make myself feel better. It's always good to remember that no one ever goes bankrupt taking some profits. And I make sure that I'm not investing any money that I think I'll need in the near term. And I basically invest the rest. For me, I found that this is a better strategy than just saying I'm going to wait for a crash before I start investing. You've probably heard this saying, but it's worth repeating. It's not about timing the market, it's about time in the market. The second reason that prevents people from investing is that they say to themselves, well, I don't have enough money to invest anyway. In fact, there are a lot of brokerages that don't have any minimums, basically. The M1 Finance brokerage that I'm always telling you about because it discourages day trading and I like its portfolio approach to investing. M1 Finance has a minimum investment of $100 to open your account. By the way, use the link in the description if you're in the United States and you'd like to buy stocks and support the channel. I know, really smooth translation. If you're outside the United States, I've heard good things about trading 212. I haven't tried it myself, so I can't really recommend it. But they have a $1 minimum. And something that I noticed on their site was that you could start out with fake money, which may be a good option if you have never invested before and would just like to get a feel of how things work. Now you may be thinking, oh, well, what's $100 going to do? If I invest $100 and I get a 100% return, that's only $200. Whoop-de-doo. Big deal. To that, I would say, remember the hadith from the Prophet, peace be upon him, أَنَّ أَحَبَّ الْأَعْمَالِ إِلَى اللَّهِ أَدْوَمُهَا وَإِنْ قَلَّ. The Prophet, peace be upon him, said, the most beloved deeds to Allah are those that are done with consistency, even if they are small. If starting in 2016, you invested $5 in the market, every day the market was open, you would have invested around $6,000 by now. And your account would be close to $9,000 if you had basically the average return of the NASDAQ during this time. Now, I'm not saying that the NASDAQ is all halal. I'm just saying that if you had a pretty average return or a return that was similar to the market return, what your results would be. If you had invested $20 a day, every day the market was open, you would have invested a total of around $25,000 and your account balance would be close to $36,000. So you would have $11,000 more dollars than you would have if you just had saved your money and kept it in cash. Think about all the things that you could do with $11,000 in extra money. And this effect really compounds with time. So if you say that in the next 5 years, the NASDAQ has the same return as the last 5 years, and you continue on this policy of investing $20 a day for the next 5 years, so 10 years total, you will have invested around $50,000. But your account balance will be more than $100,000. It will be closer to $110,000. So you will have earned $60,000 that you would have not had you just saved your money and kept it in cash. Now think of what you can do with close to $60,000 more. Now you may be saying, oh, well, $20 a day, every day the market is open, which is 5 days a week, typically. Well, that's too much for me. Well, do less then. Think to yourself, what are some things in my daily routine that if I cut down on or changed a bit would save me some money, would save me $5 a day or $10 a day or $15 a day. Perhaps it's packing a lunch or making your coffee at home. Or perhaps it's canceling a few subscription services that you're not benefiting from. Over time, these behavioral changes and investing your savings can mean the difference between renting your entire life and owning a house. It can make the difference between retiring at 45 and retiring at 65. Never underestimate the power of the small deed that is done consistently. The third reason that keeps people from investing is that they say, well, I don't know enough. You need to be an expert. You need to know, especially as a Muslim investor, you have to figure out which stocks are halal, which stocks should I buy. To this, I would say, if you don't want to worry about picking the stocks yourself or screening them for halal criteria yourself, then there are ETFs that are catered to Muslim investors that purport to invest only in halal stocks. And I've reviewed a number of them on this channel, so you can check those reviews out. And basically, all you have to do if you go the ETF route is to buy shares in the ETF, and then the ETF managers will take on the responsibility of picking which stocks to invest in. Now, a lot of these ETFs are meant to follow certain indexes, and these indexes often contain companies that end up becoming overpriced because funds are blindly following indexes, and these companies are in these indexes. So regardless of the merit of these companies, the funds are gonna buy shares in those companies. So you end up with a number of companies in each index that are overpriced based on their merits. And if you were to exclude these companies from your investment portfolio, you'd probably do a lot better in terms of returns. So I think there's a lot of merit to putting in some effort into picking your own stocks if you have that interest. But there's a lot of merit in simply just buying an ETF and having someone else pick your stocks for you if you don't have an interest in figuring out which stocks to invest in yourself. So I think there's merit in both approaches. If you decide to go the route of the self-directed investor, there are a ton of resources online. But what I will say on this topic is that if your investing is requiring a lot of brain power and calculations, then you're probably doing it wrong. Investing should be really easy. At the core of it, investing is simply picking companies that you think are going to make a lot of money. And you may be surprised to hear, but I think that the regular person's insight into which companies are going to make a lot of money are basically as good as the insight of most analysts on Wall Street. It's just that the non-finance person tends to underestimate their ability to pick good companies, and the analyst on Wall Street tends to overestimate their ability to pick good companies. A lot of people don't know that they have a real advantage when it comes to investing if they just stuck with the things that they knew really well, if they stuck with their circle of competence. So as an example, let's say you're a dentist, right? And you notice amongst your customers, they're always asking you about Invisalign. Let's say we're talking about the period when Invisalign first came out. And you've noticed that this product really works, it's better than braces. And so a logical step for you as an investor would be to say, okay, who's the leading manufacturer of this product, and maybe put some money into that company. However, if you go and ask a dentist, what they're invested in, oddly enough, very rarely you hear answers that are related to their field. More often you hear something completely random is outside of their circle of competence. They'll tell you they're invested in some oil company in Venezuela or something like that. So if people stuck with their circle of competence, I think that they actually would have some pretty good results investing. So that was my attempt at answering the 3 most commonly cited reasons for people to delay getting started with investing. I hope you found this video beneficial. If you did, I'd really appreciate if you left a like, subscribe for more content. Until next time, make sure to take care of yourself. Assalamu alaikum and peace be upon you all.